Good morning and happy Thursday. Good to see all you guys. Welcome back to the Daily Grind. I'm your host, Chump Change. This is live recorded for anybody that might be new here. What we typically do is go over crypto news in the space. I update myself, bring you guys along for the ride. Let's see who's here, and then we will get into this. Mr. Motu, if that's how you say that, good to see you, buddy. Overboard Tech, Solar Miner, U4, good to see you. Chris Hanley, Black Hat Team, Dumpster Fire, Dakota Miner, good to see you. Steven Cicero, my man, appreciate you. Mike the Miner, good to see you, buddy. Haven't seen you in a minute. Mr. Max Voltage, up and Adam bright and early, good to see you, buddy. Lawnmower Man, Michael Stewart, good to see you. Good morning. Overboard Tech. Who else? Let's see. Raptor Mining, good morning, sir. Good morning. Rob Mines, Backwards Miner, may have already said that. Dan R, good to see you, man. Andrew Masad, good morning. All right, everybody else I may have missed, I apologize, but let's get into this. Bitcoin 66,987. Looks like we got Ethereum over here at 37.93, having a little bit of a pullback, 1%, not bad at all. We have Solana killing it today, $142 per coin. Crazy. Solana, what do you guys think? I think Solana might have a potential to get to about $1,000. What do you guys think in the run? Let me know. I'm really interested to know what you guys think. Man, I started my music like in the middle of the track and it really bothers me. It like threw me all off this morning. All right, let's see what else we got. Matic is up 6.29%. We got near $5.55. Look at that. We got AVAX at $42. Let's see. Dogecoin and SHIB taking a little bit of a pullback. Actually, all the meme coins looks like are in the red. At least the ones on the front page here. Dogecoin at 15 cents. We got Shiba down 11.55%, 4031. Let's see. I don't even know how you'd say that actually, to be honest. But anyways, everything looks pretty decent, right? We had a crazy run, giant run that needed a pullback of some sort. So you know what, it is what it is. Oh my God, hold on. Render, what the frick is happening with Render?
Perfect.
$9.74. Oh my God, I'm so mad at myself. God damn it. Well, I guess you can't win them all. Can't win them all. Oh man, that's crazy. Man, I told DJ about that at like $2. We forget I sold out at least. I don't know if he did. God damn it. That's crazy. Render's up 33% today. $9. I can't believe it's almost $10. That's crazy. Crazy. $3.67 billion market cap. Wow, that's nuts. We have AGIX. Looks like it's 37.6% up on the day. Fetch AI is up 34.7. Again, Pepe's down 13.1%. We have Whiff Hat just down 12.9%. Dude, that one cracks me up every single time. Bonk is 14.2% down. Again, Solana 10.8. We have Near up 24.5. Flows up 16.3. AKT, which is a cash network, 22.3% up on the day. Geek of all trades, what's up, buddy? Oh, I forget the button. There it is. Almost forgot which button it was. Thanks for being here, buddy. Appreciate you. We have WorldCoin. There was some, man, I think there was WorldCoin news, but I don't know if I'm playing it this morning. I forget. 9.6% up on the day. Anyways, FTM Phantom is up 17.2. Not too bad. All right, Flashbang Fear and Greed Index looking like an 82. It actually was down quite a bit yesterday. It's back in extreme greed today. I think we're going to be floating around this area for a little bit, to be honest, at least until the halving, but we're going to have to see. I don't know. We could have a bigger pullback. Who knows? You guys let me know what you think about it in the chat. Good morning, Martin. Good morning. Good to see you, Crypto Frank, as well. My man, appreciate you guys.
Perfect.
All right, top 10 coins over here. Buy coin market cap over on CoinGecko. We have Bitcoin, Ethereum, Tether, BNB, Solana, Lido Staked Ether, XRP, USDC, Cardano, and Dogecoin. USDC come down. What the hell? What is this? What is this? A dump on USDC. Weird. That's strange. That moved down a couple pegs, or is it me? Mr. Old Man Crypto, thank you for becoming a channel member, a Chump Change VIP. You're awesome, buddy. Thanks for being here. We have, let's see, Shiba still in 11th place, actually. Holding pretty well in 11th place, which is kind of surprising. AVAX again, is in 12th place, just behind Shiba by 2 million or 2.3 million or so. I say million, I meant to say billion, not million, my bad. Depegged again, I guess. Yeah, I don't know. This is I didn't hear anything about this, but apparently, yeah, depegged down to 98 cents. That's terrible. Hey, is what it is, man. Things happen, I guess. With that, I don't know what happened with that though, or why. But it looks like Tether's under a buck too, which is kind of weird, right? That kind of caught me off guard a little bit. All right, let's see. We have Litecoin over here in 22nd place, $85. I still think Litecoin is a little bit undervalued, or a lot of it undervalued, actually. I think it should be closer to top 10, to be honest. This is my opinion, but to each his own. We have ETC in 25th place at 36.91, looking pretty good. Hedera, you know what, I gotta look into this today. I have a feeling this might be a good buy. I don't know why. I really don't. I don't know. Does anybody have this? Please, anybody, information on Hedera, load me up in Discord, please. I would appreciate it. Thank you very much. All right, Caspa in 39th place. You know what, I was supposed to buy some yesterday and I got stupid busy. I had no time, so I'm gonna make a video today showing people how to buy Caspa if you don't have access to an exchange with Caspa on it. So that's gonna be one of my videos that I'm gonna drop a little bit later, and then I'm gonna do like a couple new videos for like newer people, like how to mine meme coins and all this other bullshit. So I'm gonna get like a bunch of how-to guides going, I think this week or towards this weekend and stuff on the channel. Render again, 30, man, it's ranked 38. Holy shit, it's crazy. I can't believe the price right now, $9.62. It's freaking nuts. That's crazy. Pepe, what do you guys think about Pepe? Actually, I know obviously it's a meme coin, right? It had a crazy run. It's at a $2 billion market cap. Do you guys think this has a chance to just explode, or is it me? Let me see. Oh yeah, great for bull run videos, genius, geek of all trades. Appreciate you, buddy. Yeah, don't steal my ideas, all right? don't hobbyist me. Let me see. Steven Sister, I'm just kidding. I'm totally kidding. I don't care. Everybody should make videos. It's good for your channels. You should do it. Tangem just added Hedera yesterday. Oh, sweet. Hell yeah. H-Bar just been added to Tangem. Thank you, Steven Cicero and Mr. Crypto KJ. Let me know what you guys think about Pepe. It's actually still pretty cheap. You know, obviously it's 5 tenths or 5 zeros rather before the 6. I don't even, how do you read this? Does anyone know how to read this? Can you, someone say it in the chat? How do you read numbers that are like way beyond the penny? How do you do that? Mr. Crypto Frank, my man, thank you so much for the 20 gifted memberships, dude. You're awesome. You are amazing, sir. We are just going to shut off the music because that thing's going to go wild for the next 20 minutes. All right, let's move on to the mining segment of things. As you guys know, I like to timestamp this stuff. We have over here top miner of the day, as always, the Bitmain Antminer KS5 20 terahash unit. We got $186 a day. This thing is producing 1,227 Caspa per day. I'm not sure if I don't know how fast are they going to continue to come out with new miners. Do you guys think it's going to be every 3 months, every 6 months? Like, what do you guys think? Let me know in the chat, because these things have been, I feel like the Windminer K9 is still pretty new, right? Within a couple months, if I'm not mistaken. And then they started with the BMKS Max. That one's making $93 a day. The K9 right now is making $91 a day. We have the KS3 9 terahash unit, 9.4 rather, is $82 a day. The KS3 8.3 terahash is making $72 a day. We have the original KS3 from Ice River making $69, and the KS3M is making just under $50 per day. So all those are actually still killing it, but man, like, how many more units do you guys think they're going to come out with before we see like a different coin being on the top of the charts, I guess? Crypto Frank, thank you so much, man. You're awesome. Let's see. Does anyone have a Windminer? I don't think so. And that's like the other thing. I've never seen a video on any of these, right? I mean, obviously these two are like really new, but this one, I've never seen a video on it. I don't even know. I don't know if anyone has it. What's up, Pure Kane? Good to see you, man. Pure Kane shot. I haven't seen you in a minute. Good morning, sir. Thanks for being here. Appreciate you. Mr. DJ Mines, only 600 for the new machine so far. Not bad at all. Only 600 for the new machine. 600. What am I missing? Only 600. Hopefully it's just 600 for a while. I'm lost. DJ, talk to me. What are we talking about? 600? I'm making 600. This one, the K9. They're talking about this one. Sorry, you were losing me for a minute. Losing me for a minute on that. All right, Jazz Miner X16P. Let's see what that's doing at $25 a day. Shout out to Jingle Mining for allowing me to use that for a couple weeks. We have the Ice River KS2 2 terahash unit making $16.49 a day. The K7's actually been killing it over here on CKB. Is and the Antminer K7, right? Both of these $25 a day and $23.33 for the 58 terahash model. These those have been killing it. The Antminer L7, I have my 9050 down at Terra Hosting. Shout out to them. Links are in the description if you guys are interested in paying 10 cents kilowatt hour instead of like a disgusting rate like I have, like 30 cents. Yeah, this thing's been running amazing, flawlessly. They use Foreman over there, and it's really not that bad. It's pretty easy to actually look at you know, both your machines or whatever. I have two machines down there, so it's just easy. You can see all your ASICs on like one dashboard. It's super simple, right? $13.63 per day for my Antminer L7 9050 gigahash. Again, this is merge mining Litecoin and Doge. They need to fix that. The Superscaler K10 still mining Carlson is the most profitable. $11.67 a day. This is the FPGA, and I know you can actually mine lithium with this as well. Let's see. We have the X16Q over here at $9.18 per day. I got this thing actually auto converting right to Caspa, mining ETC to unmineable. So that is just going to be my play for now while Caspa's down and ETC's pumping. That's what I've been doing. We have the Ice River KS1 1 terahash unit making $8.15 a day. Where is the S? Where is it? S19K, where is it? I always miss it. I feel like I went right by it. I probably did. What is my S19K make? Oh, right here. S19K, 120 terahash unit. I have one of these as well at Terra Hosting. $6.77 per day. And man, you know what's really bothering me? These things, so these miners, right? Obviously, Bitcoin's probably, you know, it is the best coin to hold, right? But at the end of the day, these miners, they don't yield that much, because you have to spend like crazy amounts of money to get like the best miner to make more, right? But like even the best unit, what's the best unit right now for Bitcoin? This one right here. This is the S21 Hydro unit, right? This is $24 a day. Is buying Bitcoin miners actually a good deal? Like, is that smart? What do you guys think in the chat? I would like to know personally. Do you guys think it is smart to purchase Bitcoin miners versus getting like a Caspa ASIC and just having this thing convert to Bitcoin? I don't know. It's really like, I don't know. Bitcoin mining is like, it's hard for the home miner now, but nonetheless, that is pretty much going to do it. The Ice River KS0 Pro, we have the 200 gigahash unit. I got 8 of these running next to me, $1.68 per day. I think I'm making like $1.50 at my electric rate, but nonetheless, let's get into GPUs over here. All right, you know what I'm gonna do? Crypto Frank, I love you to death, but what I'm going to do is actually mute that, because let me see. I'm gonna kill the sound. Let's see. I think that'll work. There we go. I killed the sound for a bit. All right, let's see. We got GPUs over here. The RTX 4090 mining Nexa. Nexa is the highest profit over here, $2.46 at the with the 4090. Not too bad. We have BTG top of the charts. Interesting for the 4080. Ursa, this is one of them new coins, right? It's only been out a couple days. Mining pool. Oh, actually, it's right here. Mining pool stats.stream. Go to new coins. You guys can actually see Ursula right here. This is another fork of Caspa, I assume. Just as heavy hash. I don't know why it's not K heavy hash, but nonetheless, it is a new coin. It's only 12 where are the days? 8 days old. 8 days. So please be very careful when you guys are like looking into new coins like that. We have Pyron on top of the charts. Nexa, like I said, Chlor. BTG is actually killing it, man, on a lot of these cards right now. That's Bitcoin Gold. Interesting. Does anybody mine this? Anybody mine Bitcoin Gold? Let me know in the chat. Let me know in the chat. Let me know. All right, let's get into Actually, you know what? Let's hold on real quick. Let's see. Let me just see what the ASICs are over here, because I don't. Cedra's back at the top of the charts. What? Oh man, now I gotta look at my. Now I gotta look and see how much I got. I was back on the top of the charts. $232 a day for the KS5. Wait, what is happening? Is Cedra back at the top of the charts? You guys, I didn't even do that. Is that lying to me? $186 on Caspa. I'm glad I checked this. And this one's saying Cedra KS5 $232, so $50 more. Wow, interesting. Please stop the sound. LOL, so loud in the car, Frank. Sorry, buddy. I apologize. I'll have to lower that. Cedra MEXC funding is complete, listing soon. Oh, interesting. Okay, Crypto KJ, that makes sense. Hivemapper email yesterday, upgrade bonus 4,000 honey. What? They're gonna give you 4,000 honey for upgrading? What? That's crazy. Chia halvings in 4 hours. Is it really? Nice. I think you got to drive a buttload of miles for the upgrade. Oh, interesting. Man, this is kind of more shocking to me, to be honest, that Cedra is actually more profitable than Caspa again. So I guess I don't feel as bad about that video. All right. DJ, thanks. Thanks for screaming over the super chat. Leo Lustig, my man, appreciate you. Perfect. Just stopped in to say good morning. Smash that like. I hope you're all doing great. Miss you guys lately. Leo Lustig, you're awesome. Appreciate you, buddy. Thank you for that. All right, let's get into the news of the day, guys. We have over here Yahoo Finance. Bitcoin, $100,000 is in the cards. Let's see what they got to say over here, guys. Hit that like button. Appreciate you for hanging out. Again, links are in the description for all of these videos we will watch here today. Let's do it.
Now, clawing back some of the losses from yesterday, at least in the green today, standing at about 66,875. Now, this comes after the cryptocurrency surpassed 69,000, blowing past its all-time peak briefly, and then taking a tumble. Our next guest called for Bitcoin to hit 100,000 in 2024, but retail investors still haven't come off the sidelines yet. To break down what the latest swings signal for crypto investor sentiment, Anthony Trenchev, Nexo co-founder, is here. Good to have you back on the show here. So, how much of the movements that we've seen so far in this past week are about investor sentiment versus some profit taking or some other factors at play?
Well, to me, 100,000 is, in the cards for this year. So I think we have a long way to go. In crypto, we care about purchasing power and sound money. So the inflation-adjusted all-time high is now at $79,000, and so we have a little bit yet to climb to reach that, if you permit me this joke. But I think what is most important here is that the macroeconomic backdrop is perfect. Last time we were trading at those levels, interest rates were closer to zero. Now they're above 5%. And then you have to think about structurally who's holding Bitcoin. It is people like me who you would have a very hard time convincing to sell their Bitcoin. Push comes to shove, I might buy some put options, but that's as far as I would go. Then the ETFs are just gobbling up all the supply that is out there. And you have some hot money traders on the long and the short side. And those are the ones who are responsible for the wild swings we saw yesterday, for instance.
Yeah, the gains in Bitcoin certainly going to benefit you, Nexo, which is an exchange, right? I mean, what kind of surge in activity have you seen personally for Nexo? And talk to me about that mix of investors you just talked about. How is this different from what we saw when the last peak was hit in November of 2021?
Well, at Nexo, we service close to 6 million clients at present. And, we have Bitcoin holders and believers who went long a very long time ago, as low as $20,000 when they invested. So they're up several 100%. What they're doing right now is they borrow against their holdings, which, at the loan to value ratio of about 50%, you can take out the capital that you invested. And if, God forbid, we end up with Bitcoin being worthless, I doubt this is what happened, is you have protected your capital. So we see a lot of people that are just borrowing against their crypto. We see some institutions.
By the way, that's a great option to be able to borrow against your crypto versus just selling it. And that's kind of man, that's like, it's such a better idea than selling your crypto to pay shit off. Like, why not just leverage against it to invest into other assets or whatever else you want to do with it? That's neat.
Coming in, companies and startups that have invested in crypto coming on board as clients. But, what really is missing is the frenzy of retail buyers, new people coming in, retail buyers, and this is usually indicative of the top. So I think we're still quite far from it.
Real quick, I just want to show you guys this. So, well, I never heard of this company before. Get funds instantly, keep your crypto, borrow without selling your crypto with rates as low as 0% and no extra fees. Just top up. Just top up and your credit line is immediately available. What? That's crazy. Has anybody else used a site like this? That's nuts. That's kind of cool though, actually. Huh.
So Anthony, what is going to be that next catalyst that gets more retail investors on board here, especially as we're already toying with some record highs here? What would be the incentive?
Well, I think via the ETFs, you have a whole new class of, excuse me for the term, but boomers coming in, and they are price agnostic as to where exactly Bitcoin stands today. They're getting their calls from their financial advisors who are telling them allocate 1 or 2%. Worst comes to worst, it might be a failed investment, but it's not going to harm your overall portfolio. And the way it has been performing, there is an asymmetric risk-reward ratio to be had here. So these are people that are coming in and they have a very high thresholds of pain. Same goes for the existing holders. So I think it will continue to go up just based on this dynamics. And then at some point, everybody will FOMO, the fear of missing out will become so strong that they will get sucked into the market. This will go with the creation of leverage. And that is when we will have the interim top. But again, think we are a bit far from it still.
Real quick, now Crypto Frank said this is the way, and I think it's pretty smart, I would think, right? But forgive my ignorance. Like with someone said, let's not Celsius again. But did Celsius do that? Did they loan against your crypto? I don't know. I never used it, so I'm just totally ignorant to that whole spiel and what happened with Celsius. But man, that's kind of neat. It's a weird, it's a neat concept. I knew it existed, but I didn't know. I guess that it was that easy.
Anthony, how have Bitcoin ETFs affected Nexo specifically? I mean, the argument seems to be that there's an easier entry point through ETFs. That means that users, investors don't necessarily have to go through exchanges like Nexo. Has it helped you? Has it provided a bump because of the sheer visibility of something like Bitcoin now? Or are you finding that you kind of have to share the space with some other players now?
Real quick before he answers that, Crypto Frank said just be careful because they will have control of your crypto, which is a good point. You have to trust these guys to hold your stuff. Again, you can get rugged like Celsius or FTX. It's more or less kind of like leaving your shit on an exchange, but they own it until you pay them back, I assume, for the loan. I don't know how that works. It's kind of neat. It's just a neat concept.
We are happy to share the space with the Larry Finks of this world because they bring in a whole different set of investors who would not necessarily come to crypto native exchanges. So it's very different. One, they start off from their brokerage accounts, wherever they might be, from dollars. It's very easy for them. We have an offering for people who want to actually hold and self-custody and have access to the underlying assets, which are Bitcoin and all the other different cryptos. So we don't feel like that's a competition, but rather a supplementary way of getting access, and we are excited about that.
And Anthony, just very quickly, a lot of people wondering about the likelihood and what it might look like for an Ether spot ETF. What are your expectations there?
Well, I think that the SEC will have a very difficult time denying Ethereum spot ETF just based on the same legal rules that force them to approve the Bitcoin ETF. There is existing futures-based Ethereum ETFs, and just like the analogy is, they can postpone it, but I don't think they can deny it. And I would be very happy to see that happen in 2024, and I think this is what will happen.
Yeah, I think they're eventually going to just have to. They don't have a choice. They're going to have to approve the Ethereum ETF. Sorry, real quick, just reading the chat. We have Geek of All Trades says there are third parties involved with multi-sig wallets. I looked into it when we were looking into buying a new house. Currently, there is a large minimum of crypto needed. Weird. Yeah, it's crypto's so volatile. It's just it kind of blows my mind to how they can like loan you money off of what you're putting in, unless they like take your crypto and they sell it. I don't know. That's so weird. I feel like they'd have to sell it into fiat to like hold your hold the value. I don't know how that works. It's so strange to me. The whole loaning on crypto is just, it's a weird concept. Anyways, let's move on. Again, Crypto Frank, thank you for the 20 gifted memberships. Let's get into the next clip here. Again, we have everything linked down below if you guys are interested. SEC Chair Gary Gensler on systemic, is that how you say that? Risk? Systemic? Climate, rule, and crypto. Let's see what he's got to say over here on Bloomberg Television. This is about a 9-minute clip. They talk about crypto, I think, towards the end. I like double check to make sure they actually talked about crypto, but let's see what this boob's got to say over here. Oh, and if I was showing the right screen, that would help. Let's do it.
I have to ask you first about New York Bank Corp with some of the drama that we've seen over this past week amidst filing concerns about commercial real estate fallout. Are you monitoring this? Is there anything you can do to protect investors here?
Well, I think your viewers would understand that in the role I'm in, I'm not going to comment on any one registrant or filer, but many banks are public companies. Mm-hmm. Those banks need to make sure that they make full, fair, and truthful disclosures to the public so that the public can make their investment decisions. I know we're going to be talking about climate, but it turns out it's connected. They need to make those disclosures that investors take, investment decisions on, and make sure they have proper controls to make those disclosures. And but I don't have anything more on this one bank.
But just broadly, you're not concerned about systemic risk that might be emanating from commercial real estate?
Again, I'm not going to comment on one bank and so forth, but
broadly speaking.
Broadly, at the SEC.
He's been lit up so many times. He's like so scared to talk on anything.
We are always monitoring markets for systemic risk. And the reason is because investors get harmed when one bank or one non-bank, it could be a bank, it could be a hedge fund, that fails and spills out into the market. I've been it ain't my first rodeo. I was even in the Clinton administration when long-term capital management failed. I was in the Obama administration when we were, cleaning up after the 2008 crisis. And it's always the American public, both investors and issuers, that get hurt. So at the SEC, we do monitor for systemic risk in our remit. And then we work with Secretary Yellen and Chair Powell and share our thoughts.
So to return to this question of disclosures, and this gets us to the news out of the SEC today, you have adopted now climate disclosure rules that have been significantly watered down from what was initially proposed. Scope 3 has been removed. For Scope 1 and 2, companies are essentially going to have to decide whether these climate risks are material to them. It's a pretty significant change. Why not repropose it by just adopting it today rather than opening it back up for comment? Have you opened the SEC up to more scrutiny and potentially more litigation that could come from this?
Well, let's just step back for your viewers just for a moment.
I'm just waiting for him to be like, fuck this, I quit. Just leave.
Have here is that today, literally hundreds, maybe 1,000 companies already today are making information about climate risk available to their investors. They're often doing it on the internet. There's sustainability reports and so forth. What we did today is we adopted a rule. We hadn't had a rule previously. And we said these disclosures need to be in your filings, in your annual reports, in your registration statements, if material. That's consistent with 5, 7 decades of what we do. Materiality is the benchmark. Investors get to make the investment decision based upon the material disclosures. In this case, climate risk is something investors want to know about. Hundreds of companies are already making such information available, but this will give it more reliability.
Are they going to turn this climate bullshit talk into mining? I hope not.
What's the cost involved here for companies that will be new to these disclosures? Typically, critics point to red tape beyond the politics here. Red tape and increased costs. You actually have a sense of this already for those that are disclosing, and I suspect from the comments that you received, particularly companies that are just making the threshold. I know you have carve-outs for some smaller publicly traded companies, but what would be the additional cost of this due diligence? Could you put a number on it?
So we lay this all out in this release. It's over 800 pages if you want to have some weekend reading. But we really based cost estimates on what commenters had given us. And you asked, we got 24,000 comments on this. And in terms, it depends on the issuer. If an issuer actually determined that it's not material to their investors, the cost would be probably quite low. But if they determine that, for instance, to inform their investors properly that greenhouse gas emissions are material, then the costs go up. But again, in the release, it was measured from a couple $100,000 per issuer to, I think, upwards to high 6 figures, but still in the 6-figure range per issuer.
But leaving it up to the issuer to decide whether this is material, could this actually result in less disclosure around climate-related risks, not more, to avoid incurring some of those compliance costs?
Well, what's interesting is if you look at the Russell 1000, the top 1,000 companies, some surveys show that already 90% talk about climate somewhere, climate risk, and about 60% put out something about these so-called greenhouse gas emissions. And they're already doing it because investors want to get that information. But again, our history, our remit is about that which is material for investors. And that's what we're doing here. And we're climate risk agnostic. And if more companies make this disclosure or fewer make the disclosure, it's about materiality. But I would say what we did today is important because it will bring some consistency and it's a real rule.
Kaylee referenced the potential for legal action here. I suspect that
it's part of our democracy.
Put some time into this, indeed, and obviously legal challenges are already being planned. There are 9 states being led by West Virginia at this point we've heard about. But I wonder, when you consider this, and you've been down this road before, is it governments? Is it corporations? Is it environmentalists who will bring the legal challenges to the SEC, or it is all of them?
I think that at the SEC, we endeavor to do things within the law and how the courts interpret the law. And so we take the economics into consideration. We take these 24,000 comments into consideration. And, of course, we take in another law that's not the securities law called the Administrative Procedures.
Why is the SEC even doing this whole climate bullshit? Like, what is happening with the world right now? Why? I'm so confused at this entire conversation. Like, why is this boob running anything about climate risk? I don't get it.
How we do rule writing. I feel quite confident that we've done something within the congressional mandate. And why is that?
And the only reason we're listening to this is because they get into crypto at some point.
It's because we're a disclosure agency, and that's all we're doing here. Companies already, 1,000+ companies are already putting out some climate risk information. Investors are already making decisions, and we're saying grounded in materiality, put it in your filings, and be consistent with what you're doing.
On the subject of consistency, though, if you're a big multinational company, the SEC rules are now what they are. California's rules, Europe's rules are significantly stricter. How is this supposed to work if you have to answer to multiple jurisdictions?
I hope she asks why everything causes cancer in, like, California. Did you ever see that? Like, on the back of things, it'll have a warning label say may cause cancer in California. Well, like it's not going to cause the same harm anywhere else. It should make no sense.
It's a very good question. They have different authorities. We're a securities regulator. Europe passes a law through their European Parliament that had a goal to manage the environment. California, similarly, through their legislation. That's not what we do. We stay within our chalk lines, if I can use tennis.
Staying within the
Old man Crypto says maybe it's California that causes the cancer.
SEC's chalk lines, despite conversations that you're having today around climate risk. You also, I'm sure, as a 5-member commission and as the staff are going to be considering in recent months, because you are facing a deadline coming up in May around a spot Ethereum.
Did you see the inhale? He was like, oh, here we go, talking about crypto.
ETF having approved.
It is, Kaylee. You had to get your crypto question in.
I do have to ask this question. Of course, we are now about 2 months into a world in which spot Bitcoin products exist. They have had incredible demand, more than $8 billion in inflows. Now the optimism is Ether spot ETFs are next. Do you not first have to settle the question as to whether Ether is a security or a commodity? Can you answer that first?
Well, Kaylee, again, on any one of these crypto tokens, it's about the facts and circumstances as to whether the investing public is anticipating a profit based on the efforts of others. But we do have filings in front of us. I'm not going to comment. I will say this is a highly speculative asset class. One could just look at the volatility of Bitcoin in the last few days. And look, I grew up loving roller coasters. Maybe in my adult years I don't ride them as much, but you really should be conscious as the investing public that this is a bit of a roller coaster ride on these volatile assets. And then the question is how firm is the foundation of the, you get to the top of that hill, how's the foundation underneath it? And are there cash flows, or what's the use case? For thousands of these tokens, there's about 15 or 20,000 of them. They also may be securities because the investing public is relying on the efforts of some group of entrepreneurs in the middle of these projects.
And would you consider Ether as part of that group that may be securities?
I understand you're asking the question, but again, I'm going to defer on that question.
Eat shit, Gary.
He just beats around the bush. I love that chick Kaylee always gives him shit. So good on her for actually poking the bear with that one. That was perfect. Sorry about listening to all that climate bullshit. I swear I thought they were going to start talking about Bitcoin mining and how it was bad for the environment and all that bullshit. But anyways, all right, let's move on. Bitcoin prices recover after retreating from the new all-time high, basically. Crypto World, CNBC Television. Again, links are in the description for all of these guys. That like button. Appreciate you for hanging out. Let's do it.
Today, crypto prices recover after Bitcoin retreated from its new record. The SEC claims that Binance US is not fully complying with the agency's request for information about customer assets. And A16Z's Chris Dixon discusses the use cases of blockchain technology from East Denver.
Perfect.
Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Cryptocurrency is recovering much of the losses from yesterday's sell-off, which came shortly after Bitcoin hit a new record high. As of noon Eastern, Bitcoin climbed more than 2.5% to just under $67,200, while Ether jumped more than 3.5% to $3,819. Now, other crypto coins fell as of noon, with Solana dropping more than 2.5%.
And now Solana's pumping. It's like $150 or something crazy.
Stocks rose today, along with Bitcoin and Ether. Coinbase jumped more than 7%, and MicroStrategy soared more than 19% as the firm upsized its convertible debt offering to $700 million from $600 million. MicroStrategy says that it plans to use some of the proceeds to buy more Bitcoin. Miners, Marathon, Riot, and CleanSpark rose between 2 and 10.5%. Now, yesterday, Bitcoin reached a record high of $69,210 before prices retreated.
That was 2 days ago. They recorded this yesterday at noon, obviously.
Okay, let's take a look at the top stories. The SEC further delayed its decision on BlackRock's application for its spot Ether ETF. It also pushed back its decision on Fidelity's application. That's according to regulatory filings this week. In January, after giving the green light to 11 Bitcoin ETFs, the SEC first delayed its decision of BlackRock's Ether ETF application. The agency is due to give decisions on spot Ether ETF apps beginning in May. BlackRock investigates.
Wait. They're saying they delayed it already? Or am I wrong? Did I just hear that right? I'm sorry. I gotta rewind that.
In January, after giving the green light to 11 Bitcoin ETFs, the SEC first delayed its decision of BlackRock's Ether ETF application.
Oh, what was it back then? They had a first, like a denial back then when they approved the Bitcoin ones?
The agency is due to give decisions on spot Ether ETF apps beginning in May. BlackRock, Invesco, ARK, and VanEck are among the firms in line for approval, as well as Grayscale, which is seeking to convert its existing Ethereum trust into an ETF. Perfect. Next, the
Did they not learn from the first time converting the ETF though, or their whatever the fuck they call it, their Grayscale shit, right? Didn't they not learn from that with like this bunch of outflows? Apparently they don't care about having these like ridiculously high fees. They have to change things at some point. There's no way they're just gonna, I don't know, we're gonna see the same thing happen. There's gonna be a bunch of shit go in, or it's gonna all come out to tax loss harvest, and then 30 days later Ethereum's gonna pump just like Bitcoin did.
SEC says Binance US isn't being completely forthcoming in its dispute with the regulator. In this court filing from yesterday, which is a joint status report between Binance US and the SEC, attorneys for the regulator said that the firm is not fully complying with the agency's requests for information relating to customer assets, among other things. The lawyers argue that Binance US refused to answer several questions and that the firm was not abiding by the terms of a consent order in its...
Real quick, Mr. Rudputs, thank you for the 249 super chat. At one point, Binance had only 2 BTC in stock. Binance. Is that what you meant to say? At one point, Binance had only 2 BTC in stock. Interesting. Thank you, Rudputs. Appreciate you, buddy.
Case against the crypto exchange and its global parent,
I was so confused.
Binance. The regulator went on to say that Binance US did not prove to the SEC's satisfaction that Binance Global employees did not have access to US customer assets. We reached out to Binance US but didn't hear back right away, though the report mentions that in mid-February, Binance said it has more than adequately complied with its obligations under the consent order. The SEC sued Binance entities, including Binance US, last June for US securities violations. The SEC also alleged that Binance US customers could be controlled by Binance employees outside the US. Last, Spain's leading data protection agency wants to stop WorldCoin from collecting personal data in a European country. WorldCoin is, of course, the crypto project fronted by OpenAI founder Sam Altman. The move comes after the agency said that it received several complaints against the company about the collection of data from minors, among other things. There have been global concerns related to data collection from WorldCoin, which uses eyeball scanning technology to generate personal IDs. In 2023, the government in Kenya suspended the project following the privacy objections over those iris scans. WorldCoin has argued that the data is used to create a unique and secure form of identification and that it was designed to protect individual privacy.
Interesting. Did anyone here scan their eyeballs for WorldCoin? Let me know. I doubt it. But yeah, that doesn't seem like it's a very good idea.
All right, turning to our crypto coverage from East Denver for our main story. I was there and sat down with Chris Dixon, the founder and managing partner of A16Z Crypto. He was there at the event and he discussed his new book on blockchain technology, the use cases for the tech, and Ethereum's next big upgrade.
Carl Coates said, just for my iPhone.
You just wrote a new book. It's an introduction to all things Web3 and how it can be an internet that you designed, that you didn't inherit, that can rival big tech. Tell me about who you wrote it for and what it's about.
Yeah, so it's a book. The book's called Read, Write, Own. And I've been working in sort of blockchains and crypto for about 10 years and felt that there have been some good books on like Bitcoin and some other topics, but no one had written a book, I thought, on kind of the broader productive vision of why we would want to build new internet services using blockchains. And so the book is meant to be for a general audience. It goes through the history of the internet and kind of how the internet has evolved. and then talks about what blockchains are and explains some of the benefits, and then talks about different applications and important new services that can be built using blockchains. And so my hope is that it will help people kind of as a good general introduction as to why people like me and all the people here are excited about this space.
No, this is a conference somewhere. I don't know where it is, to be honest.
I feel like one of the biggest critiques of Web3 so far is it's super hand-wavy. There aren't enough real-world examples. Jack Dorsey and Elon Musk are two big contrarian voices when it comes to Web3. Yeah. And part of this book, I feel like it digs into actual examples, tangible examples of how this is being used today. Like, and what do you think is the most compelling use case of this kind of tech?
Yeah, I mean, so I see blockchains as basically, the way I describe it in the book, it's like, it's in the same way that steel was a better way to build bridges and buildings than wood was in the Industrial Revolution.
Oh, it's the ETH conference in Denver, is it?
Blockchains are a building material. That's one of the things that makes them kind of harder to understand, because they're not, if we succeed, they're not going to be something that the sort of the average person interacts with directly. It's much more sort of a tool that builders use to build things. And the kind of the core idea is that if you build a social network or a game or a financial service on top of a blockchain, it has all sorts of benefits where the money and control flow out to the users and the creators of that access the network, as opposed to the companies that control it. So to take social networks today, the social networks made $150 billion in revenue last year, the big 5 social networks, and almost all of that money went to the companies behind the social networks. But when you go, when you wake up and you go to TikTok or you go to Instagram, you're looking at content created by another person, and that person is not getting paid today. And so there's a whole new wave, for example, of blockchain-based social media, where instead of the company getting the money, the creators get the money. There are games that are similar. Instead of you can buy virtual goods in kind of blockchain-based games, and instead of the company getting the money, like another user who created those virtual goods is getting the money. So it's basically I think of blockchains, and this is what I explain in the book, as a new way to build internet services where a lot more of the money and the control flows outwards to the users and creators and software developers who use the network. And I think it's particularly important now. The internet has become increasingly consolidated. There are effectively 5 companies that control 95% plus of the traffic and the money. I think AI is a very important, powerful new technology, but will only accelerate that consolidation, because AI tends to reward companies with large pools of capital and compute and data. And to me, blockchains are very important because it's really the only countervailing force. It's the only technology on the horizon that can start to shift power back to the users and the creators and the kind of the edges of the network instead of the center.
One of the big things that keeps coming up in conversation here is this imminent upgrade to the Ethereum blockchain. It's meant to reduce transaction fees by up to 90%, make it a lot.
That's coming up in like a week, right? It's like 7 days away.
Less cost prohibitive to develop certain applications. People are excited about what this means, both for gaming, but also decentralized social media. How are you thinking about that in terms of like current investments and potential investments now that post Dencun upgrade?
Most of your viewers are probably familiar with Moore's law. So Moore's law is this idea that semiconductors get better and better every 2 years, and Moore's law is one of the reasons that I now have a supercomputer in my pocket, and 30 years ago you had a mainframe computer, and blockchains have a similar kind of, it's not Moore's law specifically, it's not transistors, but blockchains have followed a similar pattern where every year or two they get steadily better. And the upgrades you're describing are examples of that. And so, for example, like we're here at ETH Denver, at the Ethereum network has gotten
it is, ETH Denver, yep.
More and more performant. There's more tools built around it. Its transaction fees have gone down. The security's gotten better. And so it is followed. By the way, one of the big reasons AI kind of blew up in 2023 was that GPUs got so much better, right? NVIDIA and companies like that. And so blockchains have their own kind of performance curve they're following, and that's very important, as it is in all computing movements. And so at some point, I think I hope we're close to that. Blockchains are good enough to create large-scale internet services like social networks and games and financial services that are used by hundreds of millions of people.
You came in this morning, you're leaving tonight, you prioritize getting to ETH Denver. Yeah. Why?
I think Ethereum, this is a big Ethereum conference. Ethereum, to me, so I think there's some people call money crypto and tech crypto. I call it in my book the computer and the casino, sort of there's people that are more interested in speculation. Ethereum has really become kind of the focal point there are other important and good blockchains like Solana and others. And so, but Ethereum conferences have become kind of the focal point of the builder community. We were chatting earlier and you mentioned that there's almost no price discussion here. People are building products. They're interested in technology. They're interested in applications. And so
that's kind of a good point, actually, that these conferences are mainly for people developing stuff and not so much like kind of how Bitcoin conferences are, right? Like kind of just like price go up type deal.
Is really, like, to me, one of the one of the best conferences for if you want to go and talk about building stuff, which is what I'm excited about.
What are you most bullish on? Is it like ZK rollups? Is there a different element of L2s in the Ethereum ecosystem you're psyched about?
We have investments, so there's sort of rollups are systems, kind of, you can almost think of like co-processors that help accelerate the main Ethereum blockchain. We have a few investments there. We have Optimism, which is what's called optimistic rollups, and then we have an investment called Matter, which is doing zero knowledge rollups. Our view is that there's sort of, it's like, you know, in the same way that like sometimes you want to use a desktop computer if you're doing Excel, and other times you use your phone. In a similar way, there's like different trade-offs you make for different kinds of blockchains or computers, and at some point, for some applications you'll want to use a certain type of system, and for others, other types. And so we think both can kind of coexist and are important, and have made investments in multiple areas.
Last question for you. We're going into a bull market. Yeah. A lot of excitement is returning to the crypto ecosystem. What are you excited about, or how are you thinking? Are you thinking differently about your investment strategy as we head into 2024, or has nothing changed for you because prices don't really matter?
I started my career in the internet downturn and have been investing for, I don't know, I guess if you also include angel investing, for 15 years. I kind of like investing when everybody else has left during the winter.
Kind of how it was this bear market, right?
Winters, because it's just, there's, you know, fewer other investors. You can take your time and really do diligence, and so we just had a period like that, and we were very active the last 2 years. And so we'll see. I mean, you know, look, I'm not a macroeconomist. It seems like the economy in general maybe has turned a corner, which is probably a good thing for the world and for the tech world. You know, I hope this time it's a productive kind of growth phase. I think things, not just in crypto, but in tech in general, got a little over exuberant probably in 2021 or 2. And so my hope is we'll sort of grow into this. There'll be a lot of new applications. Obviously, I'm very excited about blockchains. A lot of exciting stuff on AI. So I like to sort of focus on the fundamentals. And I feel like we're entering self-driving cars, virtual reality. Like, it's kind of, you could argue this, like all of these things that have been in some ways building up for 50 years in computing are all starting to happen. So I think just from as like putting on your engineering hat or technology hat, I think we're entering a very exciting time. And so that's kind of what I focus on.
Okay.
All right. Shout out to Crypto World CNBC television for that. All right, let's move on to the videos of the day. I want to go into Anthony Pompliano. If you guys don't know who he is a great YouTuber, Bitcoin advocate. He kind of he's just all around an OG in the space. He knows everything good and bad about anything in the crypto space, basically. So let's get into this. Let's see what he's got to say. Bitcoin update, all-time high, and where we are headed. Let's get into it.
What's up, guys? Bang, bang. I thought I'd do a quick video to help you explain what exactly is going on in the Bitcoin world right now. So here we go. First, we got to go all the way back to 2020. If you remember, heading into 2020, there was all sorts of signs about our incoming recession. There's an inverted yield curve. There was CEOs leaving their jobs. All of these issues were saying a recession is incoming. Obviously, no one thought that we would have the pandemic occur, but it occurred, and we got a liquidity crisis in March of 2020. During that liquidity crisis, people froze. They didn't know what to do. They wanted to sell their assets. And so the government stepped in, the Fed cut interest rates in 2 emergency rate cuts down to 0%, and the politicians printed trillions of dollars. Together, the QE, both from monetary and fiscal policy, ended up driving asset prices right back. Now, of course, if you pay attention in economics class, you know that you can't print trillions of dollars without inflation coming. Yet, there were plenty of people that said, don't worry about inflation. Inflation is transitory. Or my favorite one is, it is such a deflationary environment that you won't even notice. Well, that was wrong. And of course, inflation did come. But before inflation came, in the second half of 2020, Bitcoin went on a run. It was $8,000 when we went into the second half of the year, and it ended up topping out in March of 2021 at $64,000. Why was it doing that? Well, people thought inflation was coming, and inflation did eventually come. In June of 2021, just a few months later, inflation crossed over 5%, and it would not come down for almost 2 years. Now, of course, as Bitcoin hit 64,000, we live in a global world. It's dynamic. There's lots of moving parts. China decided they were going to ban Bitcoin mining. And so all the miners in China had to unplug their machines and move them elsewhere. This led to a 50% drop in the hash rate, and Bitcoin's price cratered.
Do you guys remember when there was like a steamroller running all over the S9s or whatever when they banned mining and all that shit over there? Do you guys remember that? The image, it was crazy. I'll try to find it.
Dropped about 50%. Throughout the summer, Bitcoin stayed right around 50% less, so in the 30,000 range or so. But of course, in the second half of the year, here we go again. Inflation was rocking, the miners got plugged back in, hash rate hit an all-time high, and Bitcoin surged once more in a coming back party from the dead.
Here it is. Look at this. You guys remember this? They were steamrolling all the ASICs over there in China. What the was going on? That's crazy, right? Insane.
Bitcoin ended up topping out at $69,000. Why was that the top? Well, all of a sudden the Fed began to talk about increasing interest rates. They realized the economy was too hot. Inflation at the time was around 7%, and we eventually hit over 9% according to the official numbers. Bitcoin sold off. Markets are forward looking. People don't wait for inflation to show up before they go buy assets that can protect them from inflation. And also, people don't sell assets that protect them from inflation if they think inflation is going to go down. And so Bitcoin crashed, and it crashed hard. It kept going down all throughout 2022. Eventually, we even got the big puking from FTX, BlockFi, Celsius, and others. And so from there, we saw Bitcoin bottomed out somewhere in the $15,000, $16,000, $17,000 range, $16,000, $17,000. And people thought it was dead. Plenty of people calling for 10K. Some people even calling for zero. Bitcoin is going to zero. Well, newsflash, it didn't go to zero. Instead, Bitcoin slowly came back into the 20,000s, then eventually into the 30,000s. We got all the way to $42,000, and we saw the Bitcoin ETFs were approved. Now, why was the price going from that 17,000 back up into 40? Well, it's because people wanted to front run the Fed. They thought that if the Fed was going to pivot and go from high interest rates back down to low interest rates, you should go and buy the assets before the Fed does it. Markets are forward looking. On top of that, we got an increase in global liquidity. That global liquidity was coming from China. We saw that the Fed, the ECB, and the BOJ in Japan, they were all contracting their balance sheets. They were trying to drain liquidity from the market. But China, they didn't care. They were pumping liquidity into the market. They were pumping more liquidity than the other central banks were draining, and therefore there was a net gain in liquidity, which is a great, great tailwind for financial assets. And so Bitcoin was a big beneficiary. Then, of course, January 11th, 2024, we get the approval of the Bitcoin ETFs. 11 ETFs, all rocking. The response from the institutional world has been greater than I think that anyone thought was going to.
You had to send me a video, Patrick Murphy, really? All right, fine. We'll play it real quick. Sorry, guys. Didn't mean to cut him off, but I wasn't expecting this to be a video. Oh, my God. I didn't know they had a video of this. Oh my God. They're just steamrolling all these poor ASICs. Like, why? What the fuck? Oh, that's terrible. All right, I can't watch that anymore.
To occur. We have seen at this point, just one fund, just BlackRock alone, has over $11 billion in assets in their fund. We've had over $8 billion in net flows, and we are seeing that there is at least 12 to 14 times more demand every single day than there is actual Bitcoin that is being produced by the network. Why is that important? Well, if you have more demand than supply, then the price has to go up. Again, economics 101 class. But the beauty of the Bitcoin network is that Bitcoin does not respond to increases in demand. If you saw gold or other assets have more demand, people would go invest money to create more supply so that they could satisfy the demand, and the market would try to find an equilibrium. Here, there is no ability to create more Bitcoin, and therefore what you get is that you see lots more demand than supply. Supply doesn't change. Price has to go up to accommodate everyone. And then we look on the horizon, we have the Bitcoin halving coming. In less than 50 days, we will have that Bitcoin halving. So although there are 900 Bitcoin a day coming into the market, that will drop down to 450. Why is that number important? Well, if we're already at 12 to 14 times more demand than supply, and we get the supply cut in half in terms of the daily incoming supply, that means we could be at 25 times more demand than supply if demand continues to be at the level it is, and if the halving correctly executes as it has done in the past. So that means that there is likely to be much, much more demand in the future than supply incoming every single day. But not only is that occurring, at the same exact time, Bitcoin punctured the new all-time high. It was only by tens of dollars, $20, $30, but still it did touch a new all-time high.
Which is record-breaking. It's never happened before the halving, ever.
In the past, we have seen 3 of the 4 times that Bitcoin has broken through the all-time high, that the price of Bitcoin has doubled in 18 days or less. Dylan LeClaire, a great Bitcoin analyst, came up with that analysis that showed 3 of the last 4 times that Bitcoin set a new all-time high price, Bitcoin's price doubled in 18 days or less. Pretty incredible. Now, does it count if it only went $20 or $30 up? It does. It depends. Today's episode is brought to you by...
Hold on. Go skip this. If you guys want to check this stuff out, go check out his video. Again, link is in the description below. I'm trying to figure out. Damn, that was a long-ass ad.
Check them out today by clicking on the link in the description. We did see one time where Bitcoin, according to Alex Thorne, the head of research at Galaxy Digital, went up. It kind of tapped the all-time high just slightly above. It did it a second time, so kind of twice tapped on that new all-time high. It then consolidated for about 2 to 3 weeks, and then it finally did puncture the all-time high and led to a rapid appreciation of the price. And so that's kind of my expectation now, is whether it happens right now or in 2 to 3 weeks, once we're fully through, kind of breaking that $70,000 kind of threshold, that's my guess of when we will start to see a rapid appreciation in Bitcoin. Now,
I don't think he's wrong there at all. 100%. We're going to, I think once we break through the all-time high, there's no resistance. Nothing's stopping it, right? Alexander in the chat says, I hope that's a sign that we are going parabolic instead of turning the halving into a sell the news event. I think we're going a lot higher, but the market always surprises. And you're right. I hope it does not turn into a sell the news event, because that would really suck. But at the same time, we do need to have a pullback, because if I know we just had one, but it really wasn't that significant overall, right? We went up like $20,000 in like a week or whatever it was, 10 days, 2 weeks maybe, I forget. But regardless, it was around there, right? It was between a week and 2 weeks. And we had like, what was it? A $10,000 pullback or so. And we're right back basically where we were, right? A couple thousand under the all-time high. You need to have pullbacks. If we don't have good pullbacks, we're going to have a giant pullback when this thing actually does get to its brand new all-time high, or it goes over 100 or whatever. You know what I mean? It's just going to be a way scarier pullback. That's kind of what I'm getting at.
Rapid appreciation, how quickly does it happen? What's the timeline? That's anyone's guess. I can't tell the future any differently than you can. But what I do think is interesting is that Bitcoin is up 62% year to date. That is the single best performing asset so far this year in terms of asset classes. Now, as Zero Hedge pointed out, the Sharpe ratio is 2.1, which also is quite attractive. So Bitcoin continues to remain one of the best risk reward assets that you can allocate capital to. Now, again, that doesn't mean that past performance is going to necessarily indicate what's going to happen in the future, but it does mean that from a risk reward standpoint, so far, Bitcoin this year at a 2.1 Sharpe ratio is pretty attractive. 62% appreciation, also quite attractive. Now, it's hard to argue we're not in a bull market. We're seeing meme coins go to the moon. We've seen WIF, that's exploding. We saw a recent one.
WIF. Dude, that coin is so funny. I wanted to have a giant pullback so I could buy some just because it's hysterical.
Where somebody took Joe Biden's name and they misspelled it. And that meme coin's up like 2,500x in the map.
Wait, hold on. What's the Joe Biden one? What? This is a Joe Biden coin where somebody misspelled his name and it's blowing up? It's funny because he would probably misspell his name.
Of 24, 48 hours. There is lots of frothiness underlying this. But Bitcoin continues to do exactly what it was designed. Great. It produces block after block after block of transactions. And we are seeing institutions that are raising their hand and saying, I want that asset. Some of them may want it because they actually need exposure to the financial performance. Some may want it because they think it's a hedge against inflation or currency debasement. Others may be buying it because they think that it's an index for global liquidity. And yet others, like sovereign wealth funds, actually may want to buy the ETFs to get financial exposure to Bitcoin, but not actually buy Bitcoin itself and take custody of it, because that could create complexities in the geopolitical conversation. So regardless of how you look at this, as I've previously said, it is very hard to construct a narrative right now that it is not bullish for Bitcoin moving forward.
Real quick, Mr. Retro Mike Tech in the chat. Thank you so much for the 999 super chat. He said, thanks for showing up for the mining community every day. I hope everyone in our community achieves their goals in this cycle. I do as well. Thank you very much, Retro Mike. Again, there's always somebody that's smarter than, me. Right? I'm here to update myself, educate myself, as well as bring you guys along for the ride. So I appreciate that very much. That means a lot. Thank you very much.
Doesn't mean that one, things can't change. Two, we can't get more.
And DJ, thank you for that clip. Because I absolutely love it. It's right.
Information, or three, there can't be some sort of external impact. Obviously, if the Fed all of a sudden started re-hiking interest rates and continuing to increase the cost of capital, that could have a negative impact. Another thing to be aware of here is that the people who are buying Bitcoin today are not necessarily the same actors or behave the same way as people who used to buy it. For example, if you look at some of these financial advisors, what they are going to do is they are going to allocate to Bitcoin. And let's say that they put 1%. If all of a sudden Bitcoin's price doubles or triples, now that allocation is 2 or 3% inside of their client's portfolio. They're not going to let it run. They instead are going to rebalance. And so there's some percentage of them that are actually going to become net sellers of Bitcoin. And the success of Bitcoin's price will lead to more selling. Now, of course, that doesn't mean it's everyone, and it's nearly impossible to predict what percentage of people fall in that category. But I do think that important in moments of dynamic change in a market is that you keep your head on a swivel. You got to be paying attention. The ground is shifting in terms of who the holders are. The price action is obviously bullish. But we've also never seen Bitcoin establish a new all-time high before the halving. So when it comes back and it recovers from some sort of price draw like it saw previously, that tends to indicate that there is a big change. And so understanding what is occurring there and what the potential implications are important. Last but not least, we can talk about regulation. It's pretty hard for people to attack Bitcoin now that the SEC has approved these Bitcoin ETFs. Doesn't mean they won't try, but it will be much, much harder. And so I think that overall, when I look at the market today, you can go all the way back to 2020 and look till now. We can see that Bitcoin is basically matured. It's growing up. It's being entered more into the traditional financial system. There's a trade-off. Bitcoin was something that was outside of the system. That was part of the allure of it. And so some of that is being compromised or changed now. But at the same exact time, we also are getting some of the benefits. And so now there is this trade-off of the more it gets integrated into the legacy system, the higher the price goes, but the more that we lose some of those other aspects. And so being able to separate out those two things is important, and continue to evaluate, why are you allocated to an asset? Should you continue to be allocated to this asset? And what do you think is going to change in the future that would make you change your mind? All important questions. Now, when I look at the actual regulation, I think what will end up occurring is that Bitcoin will continue to not be a security. I think that more and more of the legacy Wall Street players will buy Bitcoin. They will put it on their balance sheets. They will put it in other funds. We've seen BlackRock. They went ahead. They have a $36 billion conservative bond fund that is called the Strategic Income Opportunities Fund. They actually are getting approval now so that they can put some of that fund into the Bitcoin ETFs. And you're going to see a lot of Wall Street organizations do this, where they're trying to juice their financial returns by taking Bitcoin and sprinkling a little bit of it throughout their portfolio. So anytime that you see that stuff happening, again, it's going to be very hard for regulators or others to step in and say, hey, BlackRock, hey, Fidelity, hey, Vanguard, hey, whoever, you can't do what you want to do, because again, they've done the work. They've now come to the conclusion that this asset is valuable and they want to put it in their portfolios, and they've gotten the green light once. It's hard to repeal that back. So regulation, price action, macro, all of it looking very strong. But again, in this entire industry, anything can happen. We saw Bitcoin went up, hit the all-time.
That's like the biggest thing you guys remember. Anything can happen. Like things can go to zero tomorrow, right? So that's why you gotta only, risk what you can afford to lose.
High, immediately it dumped 10-12%. It's like welcoming all the people who are getting excited about Bitcoin. Just remember, I'm a volatile asset, about an 80 vol asset, and I can go up a lot, I can go down a lot. Do not sit on your laurels. Instead, what you should be doing is just dollar cost averaging into great assets, like Warren Buffett has said, and simply hold the great assets for as long as you can. So that's what I'm thinking about right now. That's what the market looks like. Hope this was valuable to you.
Well, shout out to Anthony Pomp for that. And real quick, this is the Joe Biden coin, or the Joe Biden coin. That is apparently the misspelled last name, which is a riot. Yeah, that's great. That's a great meme coin. Anyways, all right, let's move on. We are getting to the last video here. Larry Fink exposed Bitcoin holders do not trust BlackRock. Let's see what Mr. Lark Davis has to say over here. Again, link is in the description if you guys are interested in his channel or this video. Guys, that like button, let's do it.
Bitcoin holders don't trust BlackRock. Don't trust Larry Fink. I know the Bitcoin is pumping and the ETFs are flying, but what if I told you that the new main character in the crypto space, BlackRock CEO Larry Fink, doesn't care at all about Bitcoin, and maybe we just shouldn't be trusting BlackRock to do what's best for our hard-earned stacks of Satoshis.
And you know what? I don't think he's wrong saying don't trust BlackRock. I think he's actually Larry Fink is more, I guess, looking for the legacy he's going to leave behind. He's kind of at that stage in his life where, you know, he's probably going to retire at some point, right? At least I would assume. I would expect him to be more interested in the legacy being like, okay, I was the one that, you know, opened the doors for Bitcoin to come into this financial institution. And at the end of the day, let's be real, BlackRock's kind of on the government side here, right? So take it as you will.
Here's the truth about Larry Fink, BlackRock, and what those ETFs might really mean for Bitcoin. So is Larry Fink the new crypto main character? Well, crypto always has main characters, those larger than life people who hold sway over the markets and can move markets just with a few words. Think back to the bull run in 2021. Who were the main characters? There were people like Sam, the bank man, who freed everybody from their money at FTX bastard. The effective altruist whose
Sam the bank man
FTX exchange was delivering crypto to the masses, except, well, we all know what happened to FTX, and SBF, of course, now behind bars telling his prison guards to go out and buy Solana. On the other hand, you have
telling his prison guards to go buy Solana.
Quality main characters like Michael Saylor, the biggest Bitcoin bull on the planet, who's billions of dollars in profit on his Bitcoin play. He's still leading the charge over at MicroStrategy in adopting Bitcoin as the only asset worth holding on a corporate balance sheet. And then comes Larry Fink. In 2023, the new contender enters the arena. Lawrence Fink, Larry, the CEO of the mighty BlackRock, a man who was suddenly, surprisingly, all in on Bitcoin, talking like the best of them. So let's look at Larry's blockchain turnaround.
He was
at some
orange
point in the
pilled
last
hard.
decade. Larry Fink performed a complete 180 on crypto, on Bitcoin specifically, really crypto broadly. After all, this is a man who in 2017 was basically the view that there wasn't much more to crypto than just good old-fashioned money laundering.
But most importantly, what I think about most of these cryptocurrencies, it just identifies how much money laundering there is being done in the world.
Fast forward to 2023, though, and it's a different story with Larry Fink actively now promoting the benefits of Bitcoin. What a wild turnaround.
I believe the role of crypto is...
Oh God, why so loud?
It's digitizing gold in many ways. Instead of investing in gold as a hedge against inflation, a hedge against the onerous problems of any one country, or the devaluation of your currency, whatever country you're in. Let's be clear. Bitcoin is an international asset.
So what happened to change Larry's?
But like, see, he wants to tokenize everything, though. That's what's, you know, people aren't really understanding. So like, Larry Fink believes in the, you know, the tokenization of stuff. So like, if he wants to tokenize, he can tokenize anything, right? At the end of the day, they can. It's just, I don't know. Let's see what else Lark has to say here.
His mind. Well, there are maybe 3 possibilities to explain this. 1, Larry really just took the orange pill, man, as crazy as it might seem. He sat down, he read the Bitcoin Standard, he had the epiphany moment, and now he's simply onboarding boomers because he truly sees the value in Bitcoin. He's here for Satoshi's vision of a new future. In fact,
no, what I think he hired some young kid that actually orange pilled him, if I'm not mistaken. We heard that in one of the One of the other videos we watched, I forget what it was.
Even when Fink was linking crypto and money laundering back in 2017, BlackRock was actually testing a private blockchain to work with custodial banks. As always, watch
Private
what
Aladdin-based
they do, not
blockchain?
what they say.
What?
That being said, though, Bitcoin is a very, very different prospect to private blockchain bullshit. Bitcoin is freedom money. It is opposed to the very financial establishment, which is BlackRock. BlackRock is the epitome of everything that Bitcoin is against. Bitcoiners emphasize self-custody, and it's something that's actually sidestepped by these Bitcoin ETFs. We're trusting BlackRock. BlackRock ETFs are kind of antithetical to what Bitcoin is. Number two, there's another possibility. Here we are, it's Bitcoin's second decade. The risk-reward ratio on Bitcoin for a financial titan like BlackRock is simply at a point where it will be bad business and not make any financial sense to not jump in and be one of the first movers in the space. Plus, clients want it. They're getting the calls. Larry's a smart guy. He can read where the world's headed. They want to make that cheddar. That means Larry Fink loves Bitcoin for the same reason as many buyers before him, because it prints him money. The only difference is that backing him up, Larry Fink has BlackRock's massive reputation, good and bad.
That's a good point.
$10 trillion of money and very powerful PR forces. Remember, this is one of the most powerful organizations in the world, more powerful than most countries. And number three,
that's crazy. Think
grab
about
a tinfoil hat here, guys. This is that Fink is not buying into Bitcoin. No. He's appropriating Bitcoin because he, or more appropriately, the circles that he moves in, see Bitcoin as a threat that they can neutralize by locking it up in ETFs and assimilating it into the fiat system that he sits at the top of the pyramid on.
Oh, that's fucked up. That's messed up, actually. Think about that. Because you can lock it up. Because they have to hold the Bitcoin. They're giving you a piece of paper that says, I owe you, bro. Right? And at the end of the day, if it moves 7, 13, or 20%, you know, it's getting locked for a certain amount of hours. And if it moves 20% on the day, guess what? They're shutting the ETFs off and you can't trade them, period. So that is control of Bitcoin. Weird.
Far-fetched? Maybe. But
it's not,
then
though.
let's look
Not
at
far-fetched at all.
Fink's maneuvering prior to the Bitcoin ETFs. Well, Larry Fink was publicly cold on crypto. Behind the scenes, it was a different story. You see, in April 2022, BlackRock invested in a $400 million funding round for the USDC stablecoin provider Circle. Then in August of the same year, and you need to listen to this because not a lot of people know this. Not a lot of people know this. BlackRock partnered with Coinbase, and they began offering Bitcoin services to their private institutional clients. Way before the Bitcoin ETF, they front ran you. Okay, fine. So what? Fink came around to crypto. Big news, perhaps, but we can get a sense here of how what's publicly being stated doesn't always reflect the longer term plans for BlackRock. BlackRock, ESG scores, and of course the World Economic Forum, it's all linked together here. And then there's the way BlackRock leverages its dominance, as with Larry Fink's ESG push back in the day. This approach emphasized not the shareholders, but stakeholders, with Fink stating in a 2018 letter to CEOs that every company must not only deliver financial performance, but also show how it makes a positive contribution to society, which sounds good. He says companies must benefit all their stakeholders, including shareholders, employees, customers, and the communities in which they operate. Again, it all sounds good, but to an extent, it was a bit of a radical proposal when you really think about it. Shareholders are being bumped in favor of communities, and private enterprises are then obliged to benefit people who don't use or invest in those products. And the bottom line, financial performance, takes a backseat to making a positive contribution to society, whatever the heck that means. And who decides what is and what isn't positive? People like Larry Fink. And anyway,
real quick, son of a rabbit in the chat says if people sell Bitcoin through ETF, BlackRock will probably not sell their holdings. It means all these ETF sellers will not influence the BTC course falling. So yeah, you're right. So if you sell an ETF, right, it does not actually move the market. But if the market is starting to move and BlackRock wants to take this extra Bitcoin that they hold that isn't allocated to the ETFs and dump that shit, and it forces a 20% move, they can then pause you from selling your stuff. They could buy back in lower and gain more Bitcoin. That's kind of what I was saying.
Isn't operating a profitable business a positive contribution to society itself, gives people jobs and pays taxes and all that crap? Isn't that what's supposed to happen? Critics say, of course, it's all good.
Crypto meme in the chat, actually. I didn't mean to cut him off again, but he said, I buy the ETF in my 401k because my match acquires me free BTC. That's so smart. Yeah, so your company matches your 401k deposit. That's super smart, man. Then Fidelity pays me a fee to lend my IBIT back to them. Interesting. Covers my management fees. Wow, that's super smart. Crypto meme, good for you, man. Crypto meme, you're awesome.
Goes against amazing principles. It makes companies prioritize whatever the hell Larry Fink is in favor of, which gives him, again, excessive power. Even though he already has excessive power, he gives him even more, the kind of power usually reserved for elected officials. And it gets even more heated when you consider that a lot of people don't actually agree with Larry Fink's vision for the future of the world and how his links to the WEF confuse all that. At a time when society is so polarized, it might feel like a civil war might break out in some countries. Then, last year, perhaps seeking to duck out of the argument or take a bit of heat off, Fink actually pivoted away from openly endorsing ESG policies, saying, I don't use the word ESG anymore because it has been entirely weaponized. As mentioned, Larry Fink is also connected with the World Economic Forum, which has this Klaus Schwab character who could really just be a Bond villain. I mean, come on. Life's almost a parody sometimes. Is this real? He's in.
Let's see. Son of a rabbit. So the ETFs will never sell their holdings. They can never get enough for future needs. How do you think the big guys make their money, though? Serious question. The big guys, what they do is, man, this fucking GoXLR cable's driving me nuts. I don't know if you guys can hear that. It's like making weird noises and shit. Anyways, so the way they get it, right, is they sell high and they buy low. What they do is they have enough Bitcoin to move the price, right? To move the market, right? I mean, obviously that and fees, I get that. But just in general, if they want to acquire more as fast as they can, right, they're going to sell high and buy low. Like, they're going to force it down.
Infamous for, of course, the article cheerfully telling the world, you'll own nothing and you'll be happy. Now, if this doesn't get round to explaining who will own everything, I guess BlackRock probably is implied in this, but the WS playbook is pretty consistent with the ideas that Larry Fink has talked about publicly. Elevate the vague concept of stakeholders and whatever that means for them, evade free market norms by merging business and politics, put the corporations in charge of the world. But then this month, there was a wild twist when the WEF released a video actually praising Bitcoin. It's about a national park in Africa using hydroelectric Bitcoin mining, which is great. Why the pro BTC switch? Again, could it be because Larry Fink is on the WEF board of trustees? And Larry Fink is also, of course, the CEO of BlackRock. And they're just telling the media, yeah, go pro Bitcoin. Let's get everybody in, get all their Bitcoin into our coffers. They're loading up on megatons of Bitcoin into their ETF products and long-term implications for miner security and all this stuff when all the Bitcoin's not moving on-chain anymore. And there's no on-chain fees. It's just Larry and BlackRock.
Real quick, what the hell is going on here? Let's see. He said, Curtis in the chat said, yeah, they just buy and sell the same BTC over and over again. When the ETF holder sells, they just selling it back to the fund, and then it resells to the next person. Yeah, more or less. So it doesn't really affect the market if they're trading within the company itself, and that's probably going to be a big catalyst to Bitcoin in the future runs not moving as much as this run. That's why this run's so much different, at least in my opinion. I don't really need to. I'm going to get a freaking strike for listening to that music. We're going to skip forward.
Well, look, what if BlackRock decides to hard fork Bitcoin and create a World Economic Forum friendly, environmentally friendly, corporate version, corporate friendly, stakeholder economy Bitcoin? Drop the original and nefariously lock everyone who bought the Bitcoin ETF into the new establishment approved and establishment controlled copy. Is this likely? Is this even?
That's really tinfoil hatty, but that's kind of, I don't even want to think about it. That's weird.
Impossible. Well, it is true.
Yeah, good luck.
I don't think that'll work. Hard fork on Bitcoin, that BlackRock has the sole discretion to choose which version it continues using.
I don't know though, man. There's a lot of Timmies in the world. Do you know what I mean? There's a lot of people that are very uneducated about crypto. and they're just going to go with the masses. And that's, I mean, you've seen it since the inception of Bitcoin. There's really only been so many people in. And now it's like, it's gradually gaining steam because, you know, people are talking about it. People are learning about it, but they learn about it through these big financial institutions. So it wouldn't shock me if people did start putting money into some bullshit that they created.
Did you know that? And this led to discussions about whether BlackRock might actually create a mutant ESG box ticking proof of stake Bitcoin and declare it to be the real Bitcoin, the climate friendly Bitcoin, the one rubber stamped by the WEF or whatever they think would win.
Man, he's really going down the rabbit hole on this one.
Over. And sure, forking is technically doable. But where it gets tricky is that BlackRock would need to convince all the node operators out there to run the new version. And that would be near impossible to pull off, especially as node operators holding BTC are financially incentivized not to do anything that might actually reduce the value of their coins. They'd be voting against their own interests. And they are definitely not believers in the BlackRock vision of the future. By the way, Bitcoin forks have already happened multiple times. So we have real world examples of how they actually play out. Bitcoin Cash, for example, very famous version of that. And while it's still around, its value has absolutely collapsed against that of BTC. So BlackRock Bitcoin is an interesting hypothetical from that perspective, but not anything to be seriously concerned about, in my opinion. So is it a...
Yeah, actually, you know what? Erted made a good point. He said that hard fork should not work as the SEC has to approve it. And if they let the hard fork just go, then we have the exact proof that they are in cahoots and they cannot hide it. It's a good point, actually.
Positive that Larry Fink changed teams and he's on Team Bitcoin right now and he's one of the new main characters. Well, let's just think of the negatives real quick. Number one, too much Bitcoin concentrated with one particular investment firm that isn't really aligned with Bitcoin's underlying principles and goals for human society. Not amazing. But they're here for buck, and most of us are too. Number two, BlackRock's history of using its power to try and shape the corporate world, as its push with ESG has shown. And there, of course, they're uncomfortably strong links with unpopular organizations like the World Economic Forum, which I don't think any of us actually really trust, do we? Then there's the positives. Now, some of these are showing up in the charts already. Number one, of course, is BlackRock brings the ka-ching, ka-ching. They brought massive increased capital flows into Bitcoin. That means, of course, that the price goes up. Like I always say, we're looking at a once-in-a-market liquidity event happening right now. Number two, rising prices then bring in further new capital. People like to back winners. That has a positive feedback loop. BlackRock makes more money in that situation. Ultimately, ETFs may be one more stepping stone on Bitcoin's path towards global adoption. Number four, and if BlackRock has outsized influence and it's now in BlackRock's financial interest to legitimize Bitcoin, that actually sounds like a big positive win for longtime holders, doesn't it? So is BlackRock to be trusted? Probably not. But that doesn't automatically mean there's a cabal-led plot to undermine Bitcoin and all this kind of stuff. But I also can't rule out such a possibility. But look,
I don't think he's wrong. Interesting video. We're going to stop there just because it's getting late. We're going to go raid Miss Randy Hipper in a few. Let's get to the recap segment of things. Any questions or things you guys want to talk about? Look at Solana killing it. Almost $150. Holy shit. That's crazy. Bitcoin 67,734. We have Ethereum at 38.51. Again, meme coins are down today, but guys, they've been crazy pumping. So is what it is. Render is up 24, almost 25% at $9.43. Real quick, let's check out Chlor AI. I know DJ said this one was pumping. We're gonna see. Oh man, every time. 27% up today. Look at this, dude. Hold on, is this an all-time high? Not yet. 28 cents all-time high, but it's getting there, man. It's getting there. Holy hell. Is anybody into Chlor? Let me know. Let me know. It took quite the poop lately. 17 cents. Now it's rocketing back up. Crazy. Let's see. What's a 3-month look like? Look at that. Damn. I wonder what the pump there was. Does Chlor actually do anything related to AI, or is it just bullshit? Does anybody know? Look up Pi. What the hell's Pi? What's Pi? don't know what that is, Joker. I? Is it Pix? No. What are you talking about? AGC. All right, let's look at AGC. What is AGC? Argo coin. This one. Oh wow, 26% up today. 86 cent. Yeah, 86 cents. Sorry. Fully diluted. Look at that. $171 million. Interesting. It doesn't say the market cap. That's weird. I don't know anything about this coin. Never heard of it. Wow, it's ripping. Boner candle. Look at that. Pie is doo-doo. Well, Joker Miner. You know, he suggested it, so. All right. Yeah. We'll look at it. How is it looking? Look at this. What is it? 10,000ths of a penny. Is that how you say it? According to Green Hash. Appreciate you for the DM, by the way. 10,000ths of a penny. Is that how you say it? 5 zeros? I don't know. I think that's right. But this thing has actually been on a tear. It's been on a tear. It has doubled in the last couple days. Nuts. Market cap's insane. 296 million. But I don't know. Let's see if we can get up there. How's Hawk's favorite coin doing? Micro COQ. Where is it? Oh my god, this one rocketed even more. I'm totally kidding with Hawk. I'm just messing with Hawk. If he listens to this later, he'll laugh. Look at that though. Look at that. Jeez, man, these freaking coins are pumping. AGC is AI related, but actually an AI project. Okay. All right, Curtis. Nice. AGC. Yeah, I never heard of it. I'll have to look into it. You know what? I'll save this. And I'll check it out after the stream. Let's see. CoinGecko. I put 2Ks there. But anyways, all right. Everything's looking pretty good though. Shiba's still holding an 11th. I'm more shocked about that. Shiba is such an old coin. And man, I have saw some shitty hype videos over this. I don't know about you guys, but man, people have been just freaking clickbaiting the shit out of this one. I don't know. It's an old meme coin. I wonder if it's gonna continue to rise. I mean, I still hold my bag. I'm thinking it'll get it to 10K. That's what I'm hoping. Anyways, I have 100 million. It went up to like 4,500 the other day. I'm hoping it's gonna double, but I think if it gets close to 10K, I'll get out, or I'll just continue to hold. We'll see. I don't know. Depends. All right, guys. I love you all. You're all fantastic. We got to get the hell out of here. Hopefully you guys have a safe and happy Thursday, and we will end up seeing you guys tomorrow morning, 8 a.m. Eastern Standard Time on the channel. But let's go raid Miss Randy Hipper. She's going live in 5 minutes. So have a good one and peace out. Thank you for all the super chats. Appreciate you guys.
Eat shit, Gary.